Hi, this is Dan Stewart for your NORAM Asset Management Market Update, Wednesday, August 25th, 2010. Well, durable goods orders came out lower than expected right at the opening bell. Futures were already negative in anticipation of a bad durable goods number. The market sold off and all three indices gapped down right at 10 o'clock in anticipation of the new home sales number, which also came out lower than expectations. However, from 10 o'clock on, the market came back and rallied. With the exception of a slight pullback toward the very end of the day, into the close, the markets virtually went straight up. The Dow ended up 20 to 10,060, the S&P 3.5 to 1055, and the NASDAQ up 18 to 2142. Gold was up 7 points to $12.39 the ounce. Silver was a big winner of the day. It was up 57 cents to $18.95, up over 3%. Oil was down 97 cents to $73.46. Volume on the big board was pretty healthy at 4.5 billion shares and the NASDAQ 2.1 billion. On the Treasury front, yields were up and prices were down. 5-year Treasuries 1.38, 10-year Treasuries 2.53, and 30-year Treasuries 3.57. 3.5% for a 30-year bond? I wouldn't take that risk, would you? Over in the European front, the markets were down across the board, down mostly right around 1%. The big loser, Spain, was down 1.5%. All this was because of the weak U.S. economic data and S&P's downgrade of Ireland to AA- status. Over in Asia, it was also down across the board, but it was more severe than Europe. Shanghai was down 2.25%. Japan was down 1 2/3%, Taiwan 2.5%, Australia almost 1.5%. Most of the others were down right at 1%, with the exception of Singapore, which was flat. Folks, it's starting to set in investors' minds that this global economic recovery, the summer of recovery, isn't a recovery at all. An important report to watch for tomorrow morning is the initial jobless claims. Hopefully, we'll get some positive news. This has been Dan Stewart for your NORAM Asset Management Market Update, Wednesday, August 25th, 2010.